So I just started reading the classic book Common Stocks and Uncommon Profits by Philip Fisher, and I stumbled across the part in chapter 3 where he talks about 15 points for picking a stock. And I think this really relates to growth stocks a lot and picking good, strong companies that might not look like they're performing well, but will be performing well into the future. So I thought this would be great to tie back to Palantir. We can answer these questions, see what's happening, and get a good feel for how Fisher would look at Palantir. Let's go. Okay, so starting off with number one, and I'm not going to be telling you what to think about these. Mainly, I just want to sort of start the discussion. I'll zoom in a little bit so we can actually see it. And the first point here is, does the company have products or services with sufficient market potential to make possible a sizable increase in sales for at least several years? So if we head on over to hypercharts here, which is the place I love to visualize this, you'll see we don't have all the historical annual data in here, but when talking about, this is pretty much just earnings power and growth. We have the guidance from management that Palantir will exceed 30% annual growth rate. So if you can use that, you can use more than that because they're conservative. They beat their guidance every single time. They're overly conservative, and we have seen that to be the case. So I would say there is definitely a path to having products and services, so in this case, they're servicing, they're licensing their products with sufficient potential to increase sales for at least several years. So obviously the answer is yes. It's more of an answer or a question as to what degree. Okay, number two, does the management have a determination to continue to develop products or processes that will still further increase total sales potentials when the growth potentials of current attractive product lines have been largely exploited? Yes, we have seen this from Palantir. They started just with Foundry and Gotham. Now they're moving down market with new products. We can here. Let me pull up Palantir's offerings. We see a whole list of offerings from Palantir. Sure, these are not offerings on their own, but they're definitely part of what Palantir has been working on. Edge AI, and what else do we have? Foundry for builders. They're innovating, their pace of innovation on releasing these new products. And we talked about Hyper Auto recently. There's a lot that they've been working on and releasing. So I think that is a yes to the question here as to, would Palantir just stagnate, or do they have more in the pipeline for growth potential? So that is what I'm thinking on that question. Number three, how effective are the company's research and development efforts in relation to its size? So this one's a little more difficult, but if we scroll down to R&D here and we isolate it as the operating expense, we see, if we just ignore this pretty much, this is as a percentage of revenue. So we saw actually just about in 2019, we were coming in at 50, 40, 30, around there, and now we are pretty much flat at 30, and it recently dropped off in quarter 3 down to 24 as a percent of revenue. But actually, if you look at it in a total sense, I'm not sure where it just went, and we isolate it again, we're looking at relatively sort of flat, but a decrease in the percentage of revenue. So I'm not sure how we should really read into that, because it's asking how effective is the company's research and development in relation to its size. So I don't know, that kind of makes it seem as the percentage of revenue that Palantir is investing less into research and development, of course, in a relative sense, with general administrative and sales and marketing. So if we go back to the percent of revenue, I would not mind actually to see R&D take up a bigger chunk as it had previously. But I'm not sure. Maybe that means they've planted the seeds, and the seeds of these products are really starting to grow, and that showing with this big investment kind of dwindling down a little bit. But again, I see a little bit of a reason to sort of question why they're not investing as much in a percentage basis as they have previously. Now, number 4, does the company have an above average sales organization? Now, this is something we're not really going to be able to see from here, but we would be, I think, right to question that. We're not sure how successful this sales team, which is recent, yes, is actually to the performance of the business. So just in an effort to kind of keep this video on the shorter side, I would say that is definitely something we will need to sort of question into the future. Does the company have a worthwhile profit margin? So actually, if we scroll down to, where was it? The profit margin, we will see if we just isolate, actually, we should isolate the profit margin first. Now, of course, Palantir is not yet profitable. We see a negative 26% profit margin around there. It has been improving, of course, with Palantir's financials getting better, with them generating more profit, the operating margin along the same trend, and then the gross margin, as you would expect from this software business, of very high, because their cost to provide this service is not exorbitantly high, but their other operating expenses come in and take the margin down significantly. So there you have it there. Let's move on to the next question, because I would say the profit margin right now, of course, it is not worthwhile, but it's that sort of inflection point and improvement that you're investing in here, and we need to see that come to fruition. So what is the company doing to maintain or improve its profit margins? And I think that really is scale. They talk a lot about their contribution margin, other sort of impacts of that. We've had these stock-based compensation sort of weighing on the margin, of course, even though it is a non-cash expense, which means the company is not actually paying out cash. They're just issuing shares, which hits the dilution of the company, which is why it gets recognized. But that is sort of weighing the should say the margin down, but we will see if that alleviates into the future. Of course, improving financials all around. Their operating expenses have decreased, as we've seen, and their revenue has increased. So the margins are getting better, and I think they will continue to improve into the future. So number 7, does the company have outstanding labor and personnel relations? So on the topic of course, stock-based compensation, this is where it comes into play. Palantir is not just doing this for no reason. And this also comes into play on number 8. Does the company have outstanding executive relations? They're giving all of these executives and employees really expensive and super valuable stock options. And it's for a reason. It's to ensure loyalty to the business, to the company, and ensure performance in the long run. When you're given a stock option package, it is your sort of responsibility to make sure the company is able to perform as well as it can. So don't need to completely talk about that now, but certainly a positive for employees and for management, which only has something good to say about the future of the company. So does the company have a good depth to its management? I was just talking about this on a prior video. I do think so. So if we actually look at the governance, so of course we have Alex Karp, but who else is on here? We have Cohen, who is the one of the co-founders, of course. Then we have Sankar, who is actively involved as the COO. Glazer, who is, of course, the CFO. And here we have Taylor, Chief Legal and Business Affairs Officer. So those are the executives on here under the executive management. So there is depth. If you look at where all these people have come from, we have Stanford, and really some impressive Stanford, again, sort of backgrounds, and not just where they went to school and what degrees they have, but sort of their work experience and their backgrounds and the varying sort of diversity of thought that we even have Karp have right here, but it's sort of getting sidetracked there. I do think there is depth to this management team, and it is a positive sign, in my opinion, that the CEO does not need to even be on the conference call. We know that was an issue in this past conference call, and maybe they will change it, but at least at this point, it is a positive that there is a company behind the CEO. So, number 10, how good are the company's cost analysis and accounting controls? Now, not sure what I can really say on this. This one I will default to you as the viewer, because I'm not sure how we can sort of see that I'm not sure what it would really show. It could be more of an operating sort of deal. Cost analysis and accounting controls. Let's see what it says. I think this would be sort of more outlook and guidance. So if we head back on over to Palantir's sort of outlook, as they've said previously, and I've got to talk about this in a future video, this new announcement. But anyway, we've sort of seen their guidance be right on the mark. Now, why is that? Well, it's because they're being conservative and they really know the business. So I'd say this is sort of an accounting control, if you want to say. They're guiding for $418 million in revenue, And I wouldn't be surprised if they're right there, if they're right actually above that amount. I guess we could say that is a positive there. Not that I'm trying to say every one of these points is a positive. I'm just sort of saying what I feel. Are there any other aspects of the business, particular to the industry, which will give the investor important clues as to how outstanding the company will be in relation to its competition? So and you know what, I can just cover it now. What I like about Palantir is that they're not really trying to segment the sort of data, whatever sort of you want to call them, as a data company. They're actually working with a lot of impressive partners. So here we go with a new one. This is Big Bear AI. And now, granted, I'm just opening this now for the first time, but it says they just announced this morning a strategic partnership combining AI-powered products with next-generation operating platform, which would be Palantir and Big Bear AI, BigBear.ai. So Big Bear AI is a leading provider of artificial intelligence, machine learning, big data analytics, and cyber solutions. A whole lot of jargon right there. Let's scroll down and see what we have. So Foundry will be integrated with Big Bear's Observe, Orient, and Dominate products to create powerful machine learning extensions for Palantir ecosystem that will provide global data collection, generate actionable insights, and deliver anticipatory intelligence at enterprise scale to address high-growth federal and commercial verticals, including space. Okay, I feel like we've always seen those three together. But anyway, what my point is, to get back on track here, that Palantir is willing to sort of be the solution that integrates different sort of players in this space. They brought in Data Robot, they brought in all of these other partners. They're working with AWS, they're working with Microsoft, they're working with, what's the other big one? IBM. That was what I was trying to think of. They're really pulling everything together here to be the all-in-one platform to provide this sort of data analysis and insight. And that is really what I think is important. It's not like someone can sort of catch up and make all of these partnerships and overpass Palantir like that. It really is a moat. Does the company have short-range or long-range outlook in regard to profits? Now, this is probably a weak point right here. They don't. They really don't. They get asked about it on the conference call routinely. We were just looking at their outlook. So for the short range, it's not really a matter of profitability. It's more a matter of top line revenue and adjusted operating margins. So they're saying the margins are going to improve. And then towards for the full year, which will be ended after the fourth quarter, they give their revenue in excess of $1.5 billion for a growth of 40% again, and improved free cash flow from an additional $100 million. And then, yeah, of course, we've gone over this 100 times, but no, the company is not talking about profits, but it's talking about sort of other guidance that is important in its own regard. So number 13, in the foreseeable future, will the growth of the company require sufficient equity financing so that the larger number of shares than outstanding will largely cancel the existing shareholder benefit from the anticipated growth? So that's interesting. Basically, it's talking about equity financing. So like dilution. Is Palantir going to continue to dilute? Now, what's interesting about that is if we scroll down, let's see, does it have the actual cash? I don't know if we have the actual cash of the business, but we know it's actually, let me check, let's see if it's still around, because I didn't look at this before, but if we actually go to the 10Q document and we open it up, I want to see actually how much cash and cash equivalents, we go to the balance sheet, and cash and cash equivalents is up 300 million to 2.3 billion as of September 30th, 2021. So anyway, my point being, that's more than enough to fund operations. We've seen they've paid off their debt. Palantir didn't answer my question on the Say Technologies platform about using debt to equity and really choosing the more expensive option with equity as opposed to debt and getting sort of a low interest rate and paying that back. Anyway, they've paid off all their debt. They're sitting on a lot of cash. I don't think they're going to need significant financing into the future. Of course, they did mention the shelf offering, never explained it, didn't answer my question on that either for the Say Technologies. I'm going to try and get that answered. But anyway, I think the way it stands now is this is sort of the point, again, on stock-based compensation. Is that going to erode some of the shareholder value? And yes, the answer is yes. Of course, it's a question of how much is it going to. So that's what you got to think about there. 14, the penultimate question. Does the management talk freely to investors about its affairs when things are going well, but clam up when troubles and disappointments occur? So I guess you could relate this back to actually the earnings call that just happened. I don't know if they've always talked freely. They definitely have not. So I'm not sure this is sort of a change in tone with sort of, I don't know, the troubles or the questions, or I'm not sure. I don't think this point is directly related to Palantir and what they just experienced, but I think this is sort of this secrecy sort of question. How are you supposed to be able to understand 100% of the business, have an intimate understanding of the financials and the future if you don't get straightforward answers from the management because they're in a more secretive industries sort of thing? All right, last one. 15, does the company have a management of unquestionable integrity? This is, again, something we're going to need to see play out. The company's been public for a little over a year now, so not terrible amount of a track record here. I have not seen anything that calls into question the integrity of the management team. If you do have something, please leave it below. Again, I don't think selling stock to exercise options, that's not really a matter of integrity. I don't know. I think we'll need to see how this plays out. But basically, I just wanted to run through all of these points because I think if this is your criteria, as it is for Fisher, at least partly, for selecting a company, I think growth stocks really fit well into this, which is not really something you can say for a lot of sort of value investors and their sort of criteria. But I wanted to share this for Palantir. Hopefully this video was somewhat insightful, and I will catch you in the next video. Until next time, peace.